Hey guys, and welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. So we're going to take a look at the most anticipated earnings releases of this week, the week beginning February 14th, 2022. Happy Valentine's Day to everyone. Let us take a look. Starting off the week with Monday, there is literally not one company that I am either interested in, nor do I know any of these companies, I don't think. The only one I may know is Avi, I don't know the pronunciation. They are, as far as I was aware, they're a car rental company. I don't know if they have a holding group or if this is just a subsidiary or what, but that's the only name I kind of recognize. Otherwise, Monday. So nothing too crazy on Monday, but it gets more interesting on Tuesday. On the morning, we have Marriott. We all know the hospitality sector has been hit hard over the last couple of years. We have RBI, Restaurant Brands International, and they own some fast food chains like Tim Hortons that we have in Canada, as well as Burger King and Popeyes. Zoetis, which I believe is a drug company when it comes to pets and animals. Pretty much it for the morning. After the close, though, we have some more interesting names: Roblox, Upstart, Airbnb, and Wynn. Quickly taking a look at Roblox, this one went IPO, I believe, last year, so it's been almost a year now, ever since March 10th. This one reached highs back in November at $134, right now trading pretty much 50% lower. A market cap of almost $40 billion, and I never really understood the moat when it came to Roblox. I just thought it was any other video game kind of company. But there are a lot of people on Wall Street that are really high on Roblox, especially when it comes to the metaverse. If anything, for me, this would be a trade of a company. I mean, I might eat my words in a few years from now, but for the time being, it's not a company that I really understand on a fundamental basis. The next stock being Upstart, again, AI lending platform. I group Upstart with companies like Affirm and SoFi. These fintech companies over the past few months have been taking a beating ever since November of 2021. This one reaching a high of $390 or so, a market cap of $8.57 billion, and since then, we are down 73%. And Airbnb, a market cap of $107.8 billion. This one going IPO, I believe, in December of 2020. It's super volatile. It is a company that I am investing in for the long term. A long-term hold for me, so in the short term, I have no idea if this one's going to fall off below $100. If it does, we'll buy more. If it doesn't, we go up. Fantastic. Long-term hold over the next 10 years. I can't see Airbnb and the brand and moat that they've created going anywhere anytime soon. And also on Tuesday after the close, we have Wynn Resorts, a market cap of $10.65 billion over the past year. This one is down 25%, reaching a 52-week high of $143. Again, in the hospitality business, we see this across with MGM, Las Vegas Sands. It saw very volatile times back in the summer and in the fall. There was a ton of uncertainty regarding Macau and if they were going to renew their license, which they eventually did do a couple of months ago, but the stock price hasn't been rewarded, at least of yet. Eventually, we'll see a recovery and we'll see surge in stock prices, just that time hasn't come yet. Shifting on to Wednesday, we have big names: Shopify, The Trade Desk, Barrick Gold, and Kraft Heinz. And that company, whenever I think of it, I think of Warren Buffett, who invested in it and lost quite a bit of money, just to show that it's hard to pick individual stocks. It's a very dynamic business that you will be wrong, and you have to be able to accept that, kick away your ego, and continue making the best decisions moving forward. This one was a very tough pill for me to swallow. So back from November, when we reached highs of $1,762, we have fallen off a cliff, down 50%, now with a market cap of $103 billion. Shopify still is trading expensive, but just like other big tech names, big growth names, those names with really high aspirations over the long term, they do tend to trade rich and are very volatile. The swings to the upside are huge, but also the downside potential is very possible, especially in the short term. Long term, it'll be great. In the short term is anyone's guess. Switching over to Wednesday after the close, the biggest name of the week, NVDA. And taking a look at this one, we've seen a ton of volatility over the past year. It's up 58% over the past year. From the lows of March of 2021, we see gains upward of 170%. And since those gains were down 27%. Nothing unexpected from NVIDIA. Long term will be fantastic. It has a market cap of $606 billion. One of the leading companies in the world when it comes to AI, graphics cards, and the whole shebang when it comes to technology. Also a name that isn't trading cheap, but a lot of really high aspirations for the stock long term. Other names, we have Applied Materials, which is a semiconductor equipment manufacturer company, similar but very different to ASML. We have Matterport, which I wanted to get into, but that one's just been a falling knife. It is a name that does interest me when it comes to the metaverse and whatnot, but still, I haven't pulled the trigger with that one. Actually, I did, but I sold out because it keeps falling for me. QuantumScape, and Cisco. When I talk about Cisco on the channel, I always have to go back to the all-time chart, which during the dot-com bubble reached about $80. And since then, we still haven't reached that price. Switching over to Thursday, we have a retail favorite name in Palantir, Walmart, which that stock hasn't really done much over the past year and a half or so, whereas Costco has been surging in that same time frame. Fiverr, I like the company, but I can't allot it into my portfolio, and they're a company that provides freelance services. After the close, we have Roku. This is a company that I never truly understood what the moat was or why it was so special. The stock did surge for a long time, especially in Cathie Wood's fund under ARK. Dropbox, a company that I was holding for about maybe 6 to 8 months. Bought into it in late 2020, and I was able to get out at a nice profit. I don't know if it's a company I want to get back into. Currently has a market cap of $10 billion. It should fare well over the next couple of years, but like the rest of technology, there's not a lot of sentiment or positive sentiment that. Friday before the open, 2 names, DraftKings and John Deere. And this one found a 52-week high of $74 back in March of 2021. And since those highs, we are down 70%, a market cap of $17.75 billion. And John Deere, if you take a look at the price action over the last 5 years, there are a few charts that look like this. After the crash in 2020 bottomed, we went up upwards of 200%. An industrial name that manufactures agriculture machinery, heavy equipment, forestry machinery, diesel engines, and so on. A market cap of just under $120 billion with a dividend yield of about 1%. Is this sustainable? I don't know. Is it going to continue going higher? Why not? The stock market is forward-looking. It can do whatever it wants. Could it also go back to below $200? The way I see it, why can't it with a bunch of other stocks going down 20, 30, 40, 50%? I'm not saying that's going to happen, but it's definitely possible. Never say it's not possible for a stock to go lower because trust me, from experience, you're only setting you up for a lot of disappointment. Otherwise, that is the end of my video. Thank you very much for watching. As always, let me know in the comments below which companies are you most looking forward to this week. Happy Valentine's Day, everyone, and I will see you in the next video.